welcome back to Main Station. So today I'll be going over the problem with Twitter, and I'll be looking of course only at technicals, so I'm not referring to fundamental analysis on Twitter in this video, so bear with me, and I'll show you of course why I'm looking for more downside on Twitter. So let's get to it. We've seen quite a nice bull move from mid 17 to mid 18 over a year. You can see while the price has been moving up and creating a bull move, we have seen the ADX very nicely ascending. So this has been an indication that the trend will most likely continue. We have seen it decline for a period of time while we've been in consolidation, and then we've seen it crazily peak, and we hit more or less the same level we hit 3 times, which has been around 135, and this has been a resistance again. So we have since then seen a very sharp drop and a descending ADX strength in. So you can see the consolidation which has been happened. So this is usual this is normal for the ADX strength to decline while it's in consolidation, or while the price consolidates. So not really any surprise. But what's interesting is that we have seen it a little bit rise lately. You can see it created maybe a little bottom, and since then it has been ascending. Yet we have seen resistance more or less again. We are now hitting the line. So what I want you to look at is for price to either move back up, hit this resistance a bit more, maybe even break out of this line. I won't dogmatize this line. So if we break this line, this is not an indication that it will break out of consolidation, but it is an indication that we could. I won't say it will. Well, and that's the problem with analysis. Many things can happen, but nothing is determined, more or less. So what I would like to happen on Twitter is to see the ADX increase and see price go down with it. So we come back down, maybe increase it a little bit, break out of this trend line, break this resistance, and then really rise. So if we break, or let's look at it from another point. We can see that maybe if we go to the 1 hour and like 2 hour, if we go to the 1 hour, we have seen a nice consolidation after a more or less move, a bull move, some decent percent, because the S&P and so forth have been rising. Of course, the popular stocks do too, and actually quite nice gains, around 25%. So nothing bad in any sort of way. Yet we are hitting resistance. Not really any specific points. Very choppy, more or less. So we could still move back up, and we can also go back to our recent high, or what is more likely to around 35, high of 35. We can see maybe a sort of resistance in this area, but also higher 36s, also some resistance right there. So could be some short-term upside, and I made 2 possible scenarios in my opinion, or two possible bear scenarios. We can see the bull break, but I won't think I don't think that's exactly likely, or at least very unlikely, because I will go, or I'll show you why real soon. So I'm looking for these two likely moves to happen. If we find resistance right now, then I think we will move back down, create some sort of consolidation between maybe, or in February, consolidate in this area. This would also coincide with the S&P to consolidate after a bear rally, and then see it move really downwards, and maybe even like 50% from this level. And if we come back up, then maybe scenario 2 is more likely, and we'll see it break. And I think this phase 2 is most likely going to happen in 2 phases, or if you want to include Elliott wave analysis, then it most likely will be in 3, and these 3 can be divided by 5. So, and I don't usually use Elliott wave analysis. You can, and I think it's decent in its predictions. Maybe I'll do it in the future, but not for now. But why I think this will move down is this just blatant, obvious head and shoulders on the daily and the weekly time frame. And yeah, you can see we have our head, or our shoulder, head and right shoulder. Actually quite a big right shoulder, very consolidation likely. So this is interesting, but still, in my opinion, blatantly obvious, and just looking for more downside. And if we break to 260 or 226, then I think there will be no holding back. Maybe we can consolidate around 20, and I should maybe draw a line there and respect this. So of course it's still Twitter, and very highly used platform and app, so we can also find support around 20. If we don't jump back up quickly, then this could be an indication for consolidation and a move further down to $13, which has been support. Well, if we move sharply back down, then we could maybe go to 20-ish, but that's unlikely. Yeah, this won't happen in my opinion. Well, if we maybe do like that, it's unlikely. Maybe I'm looking for possible scenarios in the future where resistance and support can be hit, and you can do this. I mean, you draw horizontal lines, and then use trend lines, diagonal trend lines, and where they cross, it could happen that we will see a support point, and you would then have a price level and a nice level of timing or of time. So this is interesting to do. Yeah, it would here be done in late February. This can happen if we get this fast, and not in a 2 move, and then in a 1 move, or in a more bigger move, consolidate, and then maybe hit 20 at in late February. So this could happen. This could happen. Would be cool. But anyway, yeah, Twitter looks quite bearish in my opinion. If you want to trade it, then you want to be cautious of this breaking to the upside. If you're looking for a downside, you can short this after it comes back down, and after it breaks the hourly uptrend and reaches below like 32, then you could enter on this and maybe create a stop, or a stop loss, of course, around above 33. You can take profit in the area of high 29, but more in 30s, maybe a bit more above 30. Has been very or a more or less important area. You can see it here. So you can take profit in this vicinity, and if we find support there, then as usual, a consolidation in a form of an equilibrium is most likely and we will see it consolidate like this and move back down. So maybe come back down, reach 30, come back up, don't overreach 32, come back down, and then consolidate like this, and then maybe break down again, reach this level. Then we would have this one move or this first move in 2 phases, and then consolidate again in this area and come back down and reach this level, maybe also by or at this time of day or at this state. So this would be very nice, and I will keep this like that and show and keep you guys updated on future videos, whether this has been correct or whatever. And yeah, and most likely this will not happen so soon. I think we can be more patient in this area. So yeah, and what I wanted to show you too is on Apple. Yeah, we are now reaching above our short-term trend line. Hasn't been really important, and the breakout isn't significant, so be cautious of any bull entries or in this area. Also because we're hitting cluster of resistance, this is not really important. Very similar movements on Amazon. Come on, load. Yeah, there it is. So similar movements on Amazon. This trend line has been more important, and this is interesting that we are now actually reaching above it with actually not really big volume. So also be cautious of that, and I'll be keeping this video a bit shorter because I actually want to work out today, and I'm actually behind in my schedule. Also, yeah, whatever, for a variety of reasons. Yeah, same movement more or less on Amazon. Reached not actually found a high. That's interesting. More or less reaching the same level. So be cautious, but a bull entry can be made. And trade it up to 179 or 1790. I wouldn't, just because of the big resistance area on the S&P, and since the tech stocks especially and just big stocks are correlating with the S&P and the Dow Jones and Nasdaq, I wouldn't. And you can usually use the S&P and the big indices as movement predictions of other stocks. So yeah, we are now actually coming back down on the S&P, finding support. So we actually broke down from this area, so this is interesting. We are now reaching again. We now made a lower low on the 5 minute. So yeah, it's intraday. So don't overestimate any movements in this area. But interesting. Yeah, but that's not the main point today. And yeah, what I also wanted to show you is Tesla. We have seen another touch on the hourly on this bear flag on the top. So this is interesting. We are now more or less in ascending channel, in an ascending channel. Usually bearish side, but price has remained very nicely actually on the top of this channel, or on top of this bear flag. So usually where price remains, there's the line of least resistance. I think that's how you can look at it, but yeah, still a bearish pattern. So if you'd like to trade it, then I would look for an entry. Either if you want to be more on the risk side, then you can enter around 333, and if you want to be more on the conservative side, then you can act upon like 3 to 6 ish or 3 to 7. So, and then find an entry, trade below this area. Has been pretty important. You want to be cautious. Tesla is still very choppy. We can see it touch back down. Of course, find another support area on this trend line, confirm this bear flag, and then maybe move back down with the S&P. So you want to be always looking at the big picture, especially in stocks, since they are just correlating so significantly between each other, and not you don't want to focus on only one stock and then be surprised when it actually moves down or up. But what I mean is, if it moves in the inverse direction that you actually predicted it to, because a big index moved there, and on the index it has been quite obvious. So yeah, moving yeah, as I mentioned, you can trade this on the bear side, of course. Use paper trading. We are, or at least I am, a rookie, and most likely you too, since you're watching this video. No hate.